Hello and welcome to this market and economic update. In this video, we will take a closer look at the US dollar, gold, and stocks from outside the United States. We will explore what recent changes in each of these areas could mean for your investments. A lot of market activity this year has been driven by events around the world. Rising oil prices, tensions between countries, and shifting tariff policies have all made headlines. But one important factor that often flies under the radar is the value of the US dollar. Changes in currency values can have a real effect on your investments. They can influence everything from how your international holdings perform to the price of commodities like gold. Over the next few minutes, we will walk through what has been happening and why it matters if you are investing for the long term. Let us start with the US dollar itself. After hitting a high point in 2022, the dollar lost some of its value as global growth became more stable and investors started looking at opportunities outside the United States. More recently, the dollar has bounced back somewhat, as concerns around global events have led investors to seek out safer assets. There are three key points to keep in mind. First, a stronger dollar is not always a positive thing. While it can make imported goods and overseas travel cheaper for Americans, it also makes U.S. products more expensive for buyers in other countries. That can hurt American businesses trying to compete on the world stage. Second, the value of the dollar is influenced by many things, including interest rates, how much a country imports and exports, government spending policies, and more. Interestingly, the tariffs introduced last year actually caused the dollar to weaken rather than strengthen. This was the opposite of what standard economic theory would suggest. It partly reflected worries about U.S. policy direction and the country's long-term financial health. Third, despite these pressures, the dollar remains the most widely used currency in the world. It still plays a dominant role in global financial reserves and international trade. The dollar's rebound this year is a reminder of how important it becomes during times of uncertainty. Now let us look at how the dollar's drop over the past year affected stocks from other countries. In 2025, international markets performed very well. Stocks from developed countries tracked by the MSCI EAFE index gained nearly 32%. Stocks from emerging markets tracked by the MSCI EM index gained over 34%. Both results were well ahead of what US stocks delivered through the S&P 500. A weaker dollar played an important role in those results. When you own international investments, they are valued in the local currency of that country. If the dollar falls in value, those local currency gains translate into even larger gains when converted back into dollars. This means that currency movements alone can be a major factor in how international investments perform, separate from how well those markets are actually doing on their own. It is also worth noting that stocks from outside the United States have generally been priced lower relative to US stocks for quite some time. This is not a reason to make a sudden change to your investments, but it is something worth considering when thinking about building a well-rounded portfolio. So far in 2026, international stocks have continued to slightly outperform US stocks, even with the partial recovery in the dollar. Finally, let us talk about gold. Since it is often influenced by some of the same forces that move the dollar, gold has received a lot of attention in recent years and hit a record high as recently as late January. Since then, gold has dropped by roughly 14% from that peak. This might seem surprising given that gold is typically thought of as a safe place to put money during uncertain times. Part of the reason is that gold had already attracted a large number of investors during its run-up. When many investors rush into an asset at once, it can start behaving more like other investments. And when markets become stressful, some investors may move money out of gold and back into the dollar instead. This is not the first time gold has acted in unexpected ways. Between 2011 and 2020, gold prices barely moved, even while the Federal Reserve kept borrowing costs low and markets went through several difficult periods. Gold was also relatively flat during the stretch from high inflation from 2022 to early 2024. The most helpful way to think about the dollar international investments, and gold is as pieces of a larger puzzle. On their own, each of these can be hard to predict, but together they can complement other parts of a well-balanced portfolio over time. We hope you found these insights helpful. If you would like to learn more about any of these topics, please don't hesitate to reach out. We look forward to speaking with you.